Ladies and gentlemen, good day, and welcome to the Bank of Maharashtra Q3 and 9M FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us from the management, Shri A.S. Rajiv, Managing Director and Chief Executive Officer, Shri A.B. Vijayakumar, Executive Director, Shri Ashish Pandey, Executive Director, and all general managers of the bank. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
Thank you, ma'am, and good afternoon to all. Today, we have adopted our reviewed results morning, and we would like to share the results of the Q3 as well as the 9 months ended 31/12/22 to all of you, as you are one of the main stakeholders of the bank. And we would like to have your suggestions, if any, in future also. Whatever the corrections have to be made, that also we are ready to do that. Just I will briefly explain the results of the bank at a glance. As you seen that interest rates in the system has increased by around 200 to 210 basis points during the 9 months period, and more particularly 50 to 60 basis points in case of deposits for the current quarter. Same way, the advances lending rates also, most of the banks are increased. We have also increased the lending rate. At present, our MCLR rate is around 8.3020 level. This is the median of the banking system. And we expect that the rates are slightly another as given by the indication given by the RBI governor 2-3 days back. There may be chances of that interest rates may be either in the same level or slightly to increase by another 25 basis points. And thereafter, there may be chances of reducing the interest rates. That is the indication is given. Being that interest rate and economy in mind, and our results, this total business for the last quarter is increased by around 16% to 3,65,000 crore, and total deposits is increased by 12% to 2,08,000 crores. Gross advances increased by 22% to 1,57,000 crores, and CD ratio is at present is 75%, with an indication that by March we will be able to increase CD ratio by another 1 to 2 basis points. 200 basis points, that is 77 to 78 level. Gross NPA declined to 2.94% and net NPA reduced to 0.47%. Provision coverage ratio improved to 97%. And as regards profitability, the net profit is increased by 139% to 775 crores as against 325 crore corresponding last quarter of previous year. Operating profit is increased by 36% to 1,580 crore as against 1,162 crore last corresponding period. Net interest income is increased by 30% and net interest margin improved to 3.6%. Cost to income ratio is improved to 39.69. It is below 40% for the past 2-3 quarters, and we will able to continue the same level. ROA improved to 1.30% as against 0.60. Return of equity is improved to 25% and CRAR improved to 17.53%, which is Tier 1 is 13.47%. As you are aware that the current CRAR, this current year's profit is not added. If we add the current year's profit, the CRAR may be around 19.21%. So, earlier COVID provisions, whatever we have provided 1,200 crores, as it is we have kept it, and it is not considered for either capital adequacy purpose or for provisioning purpose. So for profitability for the 9 months, net profit is 1,762 crores as against 796 crores corresponding 9 months last year. Operating profit also shown a growth of 16% to reach to 4,244 crores. Net interest income grown by 25% year on year. Fee-based income increased by 8% to 927 crores. Cost to income ratio is 39.48 for 9 months. Return on assets for full year is 1.02% for 9 months as against 0.52 for 9 months ended 31/12/21. Return on equity is also improved to 18.50 as against 11% for the last year. So during the last quarter, we have added 1.2 million customers and 62 branches we have opened to reach to 540 districts as of now. And we have recruited around 1,200 employees as in the process because test and other things are over. This is basically for keep it in mind the new branches opening and retirement and other wastages. As regards SMA is concerned, SMA is well under control, below 2.5% of the total assets, including SMA 1 and 2. So these are the main highlights what we wanted to share with you. And regarding the digital area, I will request our EDSAP, what are the initiatives we have taken for past 1 quarter. Earlier we have already shared with you. Yes, our digital area, there are good improvement during the last quarter that will be shared by our Mr. Pandey. He is looking after the digital area. And Sri Vijay Kumar is looking after the entire internal control system of the bank and other areas. So he will share the major points with you. Afterwards, we will have the question and answer session. Is okay, madam?
Yes, sir. This is fine. Thank you.
I over to Mr. Pandey.
Yes, thank you, sir. As you know, already the brief, all our important stakeholders you have got on the bank's performance in the business. So we are inching and towards the bettering ourselves quarter to quarter. We are just making all our efforts and endeavors in that line. Certainly, the technological intervention and the digital is going to play a 2 key role, as we said earlier, and we emphasize always. The first is sustainability of the business growth, that is quality, as well as the percentage or maybe the amount wise. The second one important thing is, the embedded compliance. So you keep on having a well-compliant culture and other things using the technology. So as you see, that the last quarter we gave, and then this quarter also there is a slide on it. 2 slides are there, which shows the digital footprints and the key growth. If I say UPI Bhim users from 2.49 million to 2.53, so it is a consistent, and the transaction wise also from 326 Maya to 352. So digital transactions, which were 96.34, moved to 96.66%. So similarly, internet banking users is around moved from 21.73 to 23, mobile banking 21.31 to 22.76, WhatsApp is 2.35 to 3.15 lakhs. So QR merchant also, if we take 22.30 to 28.49 lakh transactions are happening. So what we indicated last time also, and we are very much cautious and also very much progressive on the IT and digital intervention. So UPI on some of the identified things where we wanted to be more hold, and also we analyzed the cost is better when we move from OPEX to CAPEX. So similarly, you would have seen the various RFPs which are floated for last 3 to 4 months time. So UPI already one of the best player in the market has come in, and we have started, and we are trying to close this project by March. The robotic process automation, again one of the bank public sector, 62 processes in which 48 are high complexities. So already it is awarded, and one of the best of the world, the player which is now we can very well clear, UiPath has been impaneled, and we have started. So we are planning 5 to 6 or 7 processes delivery per month. So it is going to help me on 3 things. As we said, The first is the business, which is the customer expectations and convenience, the more business. The second is the compliance, and third is ease to my staff on ease of banking. So the third is data warehouse. We have already completed, and the bank is well complied, and we are already, actually it is working, for last 1.5 months we are using it for various our returns and other things. The bank is on the private cloud, which is Nakshatra, and 3 to 4 cyber security solutions are implemented, and 3 to 4 are in process even now. So already bank is on the asset, liability, and the services side has planned around 3 to 5 STP journeys going forward, and similarly the fintech onboarding is also poised for. So when I say the upgradations, so the bank has also are having the advisors from IIT Mumbai and the other arounds. So we are having the upgradations of software, hardwares, the UPI switch already, EFT already we have done it, FI gateway. So in totality, we have started with the 4 COEs as of now. One is Center of Excellence in Database, another is on CBS with TCS, another is Cyber Security with Inspira and the Analytics. And now we are thinking of on the recon side, because it is very important to have some well-defined sort of frequencies within the day on the reconciliation and the others. So with this, I would only like to say that on the business side, how to have to start with say 3 to 5% of the business accruing from the digital side, moving to around 15 to 20% for next 2 to 3 years time. That is one. Secondly, that cost to income, certainly that how the expenses, with the change to digital systems, change to IT interventions or robotic process automation. So all those things, how it can be further made cost conscious. And third is the customer expectation, how to be met with the technology. So these 3-4 key areas which are going to support the bank in, to all the stakeholders, because customer is the important stakeholder. So on a customer service and better journeys, the staff certainly, because it is the most important if ease of doing business is there, and they are deployed for the more better, prudent and productive ventures rather than the repetitive complexities. And the third is the regulator. So more and more digital intervention which you make in the compliance will help the bank to achieve as we progress with the business. So with this, I leave it to.
Yeah. Good evening to all of you. Welcome to this analyst meet. I am Vijay Kumar, Executive Director. As you all know, Bank of Maharashtra being the premier public sector bank, we have been doing extremely good in the last several quarters. At the same time, we are constantly working in line with the national priority of keeping our technology and with the focus of customer-centric activities. While doing so, we are focusing on improving our internal control measures, compliances, and risk management. In a nutshell, I would like to say from HR side, we are transforming ourselves from government karmachari to karma yogi. This is what I would like to say at the initial. We take up a question as and when it comes, not only the business, any other improvement, because quite often the question comes the sustainability, and that's what I made a remark on that point. Thank you very much. Now we are ready to take on questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Ashok Ajmera from Ajcon Global Services Limited. Please go ahead.
Thank you for giving me this opportunity of asking the first question. I have a few questions and observations, and I request the moderator to please do not cut me unless I complete at least those 2-3 questions and some observations. Thank you very much. Now I start. Sir, my compliments to you, sir, the MD and CEO and both the EDs and the entire team of the top management of the bank for the fantastic performance quarter after quarter. And this quarter, your profit before tax is touching to almost 1,000 crore for a quarter. On other parameters also, if you see I think one of the best net NPA figure in the entire public sector bank of 0.47. Even the gross NPAs are under very much control. Slippages are under control. Your NIM is growing quarter after quarter, I think 3.6 or something even in this quarter. And the asset quality has been improved to that extent of, I think, one of the highest provision again of almost about how much, 97%. So my compliments to you, sir, on all these parameters. I think your bank, if one do not consider the size among the public sector banks, which also is now almost 365,000 crore, can be said as one of the best performing banks especially among the public sector bank, and it can match with any other private sector bank also. Sir, I have just a few observations and some questions. I would like to have some clarity on the calculation of the net worth at various places in the results also, in the balance sheet. So, the net worth of 12,699 crore is said there in the results, point number 711, where if you add up the profit and everything, it doesn't come to that level. It is rather higher. So if you take the net worth of the equity of 6730 and the reserves without the profits of this year of 5577, it becomes 12,307 crore. And if you take the profit of 3 quarters of 1,752, it comes to 14,069. But if you look at the balance sheet, again there the reserves and surplus and capital, if you add up, it is 15,644 crores. Even again in your own note. So what I would like to, if somebody who has done the calculation of this net worth of the bank at various places, different this thing, if somebody can explain me or can send me the details little later also, I don't mind about that. Sir, my second one is that there is an SR, and I am asking a bit that I hope it is 100% provided for, 197 crores of this pending SR, note number 12.4. And I would also like to know on the accounts acquired, 1,916 crore in this quarter, with tangible security of only 24.91%. So what kind of accounts these are? Because the accountability of the person from whom we bought this account is, I think, about 10 or 11%, which he is holding. So I would like to have some clarity on this. And sir, if I look at the segment-wise result, then our treasury income has come down to 34 crore, profit has come down to 34 crore as against 105 crore in the last quarter. And the wholesale book profit has gone to 676 crore against 487 crore. While the retail banking, it has again gone down to 280 crore against 326 crore. So if some explanation can be given that because of the provisioning or because of what, because corporate book has just increased now in this quarter to 7%. But how much, why this anomaly in the segment-wise profitability? I would like to know. I would like to compliment on CASA, which is of course going 52.5%, which is not a less as compared to the other banks, but it has come down from 56.27% in the last quarter. So any specific reason for that? If it can explain, and going forward, where do we see the CASA to be? Because it is the one which is giving you the maximum yield and maximum profit. I would also like to appreciate here that while the yield on advances has gone up to 8.28% from 7.81%, which is almost 19 plus 28, it's almost about 50 basis point, whereas the cost of funds have gone up only to 3.61% from 3.31%. That is only 30 basis points. So which is another good point for the bank. So sir, some of these issues, and one on the provision for taxation, which is, in spite of the profit going up, the taxes provision has come down to 223 crores from 348 crores in the last quarter. If time permits later, I would like to discuss something about the advances and the credit growth going forward. Thank you, sir.
I think, Asnagaji, this regarding this network, we will give you the detailed workings to you, mainly because of revaluation reserves and other things. Maybe it may be because some of the area revaluation, for example, share book value of the share, some of the areas revaluation reserves has to be reduced, and in case of capital adequacy also we have to change the revaluation reserve 55% only. So that may be the reason, but that our CFO will be in touch with you and give it. Regarding SR and other things, as per the valuation, 100% provision we have made, and there is no issue. Treasury yield is come down mainly because of the profit on sale of securities, because of the increase in interest rates. Last quarter, only small amount, 28 to 30 crore was the treasury profit has happened. And in case of other income, we have changed the accounting methodology also. Earlier, commission on guarantees and other things. Earlier it was on cash basis. This year onwards, we have converted to accrual basis. So the other income has come down by around 30 crores during the current year. So that is only accounting aspects. Regarding CASA is around 52.5%. Of course, you are well aware that in the highly increasing interest rate scenario, there is a shift from deposits, term deposit shifting is there. But here CASA, we may be able to contain the CASA, core CASA as it is at the rate of 52.5. So generally 3 to 4% government deposits and other corporate deposits are there. Generally because of the higher interest rate, government deposits and corporate deposits they have shifted to term deposits. But otherwise CASA rate as per 52 to 53%, we will be able to continue with the going forward also. Regarding taxation for the next 2 to 3 years, bank may not provide any tax, but however, as a precaution, we have kept some DTA, we have reversed, and we have kept for some 200, 300 crores because we have more than 15 to 20,000 crore loss created for the past 2 years. It is continuing in the books. So 2 to 3 years, there is not taxation, will not come, but we have kept some amount for taxation purpose for futuristic purpose. So otherwise, this can be considered as a profit also. So we will be in touch with you and we will give you our CFO, Mr. Srivastava will give the detail working on your network as well as other areas wherever regarding treasury also, we will be giving to you. Thank you.
Thank you, sir. Thank you. I'll come back again. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We have the next question from the line of Sunny Agarwal from SBI Cap Securities Limited. Please go ahead.
Yeah, thanks for the opportunity. Sir, my first question pertains to the sector or corporates. From which sectors we are seeing a healthy credit demand for us, and in the current, rising interest rate scenario, where do we see NIM panning out, especially for the corporate on our corporate book? So that is the first question. And my second question pertains to the customer base. So I believe we are adding few customer on current account and saving account side. So if you can throw some light on what kind of customer or salary account we are adding, especially in a hyper competitive environment where everyone is chasing those CASA in the rising cost of deposit scenario. Thank you.
So this first question is regarding corporate NIM. NIM of the corporate on an average 2.5% NIM we are getting from the corporate. And we have not got for...
Sorry to interrupt, sir. Sir, can you please begin again? Your voice broke a little bit.
So, first question is regarding NIM on corporate book. And corporate book NIM is around 2.75 to 3% NIM is from the corporate book. And so, that yield is comparatively good. And we have not gone for any low interest rate scenario, any of the accounts, we have not gone for cases. So the average yield is good. And regarding current account and SB account, mainly the salary accounts and other things we are getting statewide. For example, one example I can tell you that we are having a tie-up with some of the state governments and other things, and salary accounts as well as their loan accounts like housing loan account like that we are getting. Plus, we are SNA accounts is the major area of our source. That is, we are having so many state government, and if we are continuing to, our team is very strong government department team in Delhi as well as in Mumbai and different state head of the states. Our team is very strong. It is a strong force of around 250 to 300 people are working for that. So for this, that is the major area of benefits is coming from current account and SB. So these are mainly SNA accounts and corporate accounts as well as the salary accounts. Thank you.
Okay. Sir, so which are the sectors from where we are seeing a healthy credit demand or loan demand? Which are the industries which we are planning to lend over the next 12 to 18 months?
I think our GM credit will give you that data. Yes.
Dr. Sir, we are seeing good demand from all the sectors, be it infra or manufacturing. So there is no dearth of good proposals. Thank you. Thank you.
Okay. Thank you, sir. All the best.
Thank you. We have the next question from the line of M.B. Mahesh from Kotak Securities. Please go ahead.
Sir, could you give us an update on the NARCL and also if there's been any further traction on recoveries and upgrades on the corporate side, sir?
Yes, our GM recovery will give you that.
Yes, this NARCL, as you know, that shortlisting has been done. For our bank, 13 accounts are already shortlisted, around 2,700 crore. Now that guarantee issue is also resolved because the government has given the approval about these guarantees of ISA. And now that work of actual transferring the account to NARCL has been started. So we expect that within this week, the first account will be transferred to NARCL and then the things will move. And as per
and visibility of recovery, sir? Other than the NARCL?
Recovery, sir, as you already noticed that we are at the lowest GNPA and NPA. And now it's a challenge to maintain that level below 3 and below 5.5. So recoveries in this quarter, we expect at least 500 crore recovery in the write-off account and almost equivalent reduction in the NPAs.
Okay, perfect, sir. Done. Thanks.
Thank you. We have the next question from the line of Sridhar Sivaram from Enam Asset Management Company. Please go ahead.
Yeah, sir. So my question is on the credit cost and the provisioning. For a bank which has 97% coverage and more than 1,000 crores of provisioning, the first 9 months credit cost is 1.6, and even for the third quarter it is almost 4. So some guidance on provisioning going forward. We've seen credit costs coming off for many of the other PSU banks. You maybe prudently continue to provide very high, but if you could help us with some guidance on how to look at it for the next year.
So credit cost, we expect, sir, it will come down to 1% by next year. So this is 1.4% is come basically because for small amount is utilized for reducing the net NPA ratio because earlier last quarter it was 0.68 was there. Now it is come to 0.47. So now for going forward, we have reached our target below 0.5. Now in and around this net NPA will continue in the same level, 0.4 to 0.5 level. So there will not be any requirement for credit provisioning for reducing the net NPA. Otherwise, our addition is coming only 572 crore is the last quarter added and the recovery is almost in the same level. So there will not be any additional credit provisioning requirement is not there. Actually, it is all maximum 100 crore or 120 crore something small amount only will come. So that will continue next year also, but we expect that up to 1% credit cost is always better to keep in mind.
Sir, 100, 200 crores and 1%, there's almost 1,500 crore difference. So you're throwing numbers like 1% we want to keep. So the range you're talking is so wide. So it will help us if you can give some reasonable number, because you'll do almost 2 lakh crores of, say, loan book next year. 1% would almost mean almost 2,000 crores. So should we expect around 1,000 crores of credit cost next year? Is that a reasonable number?
So that as a conservative way only, I am telling that 1% maximum.
Okay, that seems like a very conservative number. Sir,
You can reduce the numbers. There is no problem. I am telling the outer limit.
And you have to see that we are keeping that NPA ratio 0.47. And to bring down that ratio, you are required to make provision more than IRAC now. So that's why sir has taken that into consideration.
Yes.
okay, my other question is, you mentioned about tax also, that you have substantial losses which are carried forward and you don't need to provide tax. So what sort of number should we model for next year? If you could help with some number, that will help, because both the provisioning and the tax numbers are varying so much that it is very difficult to make any forward estimates. So if you could help us with some tax number, what percentage or what absolute number should we keep for tax? Is 500 or 1,000 crores a reasonable number for the full year next year, or some sort of guidance will help?
Yeah, I'm CFO here. You see that whatever tax provision we have made, it is not the actual tax levy, it is a DT reversal. So we have created DT on the disallowed provision, and when we have written off from that, so we have reversed that DTA. And this DTA reversal of DTA will help us in improving CRR during the quarter, as the profit cannot be added during the quarter. So one thing is that DTA reversal we are using for improving the CRR during the quarter. Secondly, that we are holding 10,000 crore losses, and whatever our profit projection for 2 years, we don't expect that there will be any actual credit tax liability. Having said that, there may be some DTA reversal to improve the CRR. That's all.
But should we expect about 500 crores of DTA reversal coming in next year?
It would be on lower side.
It could be on lower side. Okay, that will help, sir. Thanks a lot.
Yes.
Thank you. We have the next question from the line of Jai Mundra from B&K Securities. Please go ahead. Mr. Mundra, I have unmuted your line. Kindly proceed with your question.
Yeah, hi. Can you hear me?
Yes,
Yes,
sir.
yes, yes.
Please go ahead.
Yeah. Sir, on wage revision hike, have you started providing on the bipartite, and what is the salary growth that you are estimating?
CFO here, that we are expecting 15% wage revision, and accordingly 32 crore we have provided during this quarter.
November and December.
November is for 2 months.
That is effective from first term.
Yeah.
So this 32 crore is for 2 months, right?
Right. Yes, yes.
At 16 crores per month, right? That is the maths.
Right.
And okay. And secondly, so this you said at 15% you have provided, right?
Yeah.
Okay. And secondly, sir, on it looks like the standard assets provisioning has been negative in third quarter. Is it because restructuring loans are slipping, or otherwise what would cause this standard assets negative provisioning, because you are growing your assets reasonably well?
Some of the restructure that it has become the standard also. So for that we need not to make the provision. And what is if some restructure has slipped, in that case the restructure will be written back. That is the case.
And this,
yeah.
Even cease to restructure.
Well, which have become a standard. Now it is no longer to provide restructuring provision. So accordingly, we have written back the restructuring provision.
Right. So maybe the first restructuring, these people, the 2 years term has got over, right? And that is how they are turning back into standard.
Yes, yes.
Right. Okay. And secondly, and sir, on your loan mix by benchmark, so how much is repo linked, how much is T-bill, and how much is MCLR, if you have that number for your loan book?
But our out of the total loan book, 43% is our available means repo linked rate, and remaining 57% is the MCLR linked rate.
And sir, you would have something on gold, etc. also, right? Which is fixed rate or that is like negligible?
That is linked to repo.
Okay. Gold loan also?
Yes.
Yeah, actually fixed we do not have as such in the portfolio.
Right. Okay. Sir, last question, sir, on your EBLR, right? So when you had started this EBLR, what was your reset timeline? And can you change the reset timeline for a customer who is on repo rate? So if someone who has taken a home loan at, let's say, repo plus spread, and his reset was initially, what was the reset period? Was every month, every quarter, and has that been changed also?
Repo linked rates are linked to the repo only. So whenever there is a change in the repo, the rate of interest undergoes change.
But when would it be effective? So let's say, RBI 7 December.
The repo, the same day it will be effective.
Even from the beginning of this regime, right? You would have almost immediate basis.
That is the basic concept of the repo linked rates. As the repo changes, so we have to pass on the benefit and to the customer.
No, I understand that, sir. What I was asking is, does this changes overnight to every customer, or let us say...
It is applicable to all customers who are linked to repo-based lending.
Right. Okay, understood, sir. Yeah, that is all from my side, sir. Thank you and all the best.
Thank you. We have the next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Hello. Yes.
Yep. Thank you very much for the opportunity and a wonderful set of numbers. So many congratulations for that. Sir, I just wanted to know now. One point you mentioned was about 500 crores of recovery you are expecting from a written off account, right? In this quarter itself. So ideally, that effectively means that you will have that. The neutral provisioning, right? I mean, we are currently doing 500 crores per quarter, and if we kind of recover that amount, or you're planning to reduce the net NPA from that amount.
Yes, that recovery is in write-off account 500 crore is definite there. We expect in this Q4. With this, of course, it will be useful for both ways because that is direct profit, as you know. So how we use it because the net NPA as we have reached to 0.47 level. So now it is, I think, the idealistic level which we have to maintain over a period. So a lot depends upon how the slippages work. Accordingly, we'll plan.
Okay. So that effectively means our credit cost can be much below 1%, right? As we go into fourth quarter.
Yes, a lot depends, sir. What you said, we also expect, but we always conservative.
Yeah, of course, we should be conservative. Sure, I understood that point. And what sort of recovery we are expecting next year, FY24?
FY24, sir, again, the 13 accounts are lined up with NARCL. Mm-hmm. So that will keep happening now in next year. The big account 3 also, that is in NCLT, which is already NARCL only bidding. So likewise, some big accounts will come. So in the same line, we'll keep our GNPA and NPA. Accordingly, we'll at least see that my recovery and upgradation is our aim to be at least not more than, but at least equal to the slippages.
Equal to the slippages. Okay, understood. And my second question is around your growth. I mean, we were expecting around 24-25% growth this year, right? And we are, currently at 22%, right? So largely in line what we have been guiding.
Yes. Our target is 20-22% growth under advances and 12 to 13% under deposits.
Okay. And what sort of growth we are looking next year?
Next year also, around 18 to 20% we are expecting next year. Because when the balance sheet size is increasing, definitely 1 to 2% growth rate may come down.
Fair enough. I got it. Yep, that's it from my side. All the very best, sir.
Yes,
Thank you.
yes. Thank you.
Thank you. We have the next question from the line of Mangesh Kulkarni from Almonds Global Securities. Please go ahead. Mr. Kulkarni, I have unmuted your line. Kindly proceed with your question.
Yeah. Thank you very much for giving me an opportunity. Sir, I just wanted to know, today's media paper suggests that we are looking for fundraising and appointing the merchant banking. So, what kind of timeline we are looking? Will it be in the first quarter or second quarter of FY24 or later on?
You have rightly heard about the capital raising plan of the Bank of Maharashtra. Recently, we have come with the RFPs for selection, the BRLM, and what we are planning that in first or second week of February, we will hit the market. We intend to raise 1,000 crore capital.
Okay, sir. And in terms of our prudentially written off accounts, what will be the quantum on which we will be sitting, and what kind of recovery targets we are looking from that?
Yes, prudential write-off, we have already told that 500 crore we are expecting recovery in this quarter, Q4.
So what is the total outstanding quantum which is there?
Around 18,000 crore, that quantum is.
So if we are going forward also, we will be looking similar kind of run rate in every quarter, around 500 crores.
We keep our aim like that only.
Okay, sir.
Yes.
And slippages also you are guiding similar, what equal to or this thing, like upgrade and recovery will be equal to the slippages, right?
That is again our aim.
Okay, sir. Okay, thank you very much. All the best to you.
Thank you.
Thank you. We have the next question from the line of Ashfaq Ahmed from A Squared Financial Services. Please go ahead.
So, very good evening to everyone, and many congratulations, MD sir, ED sirs, and all the vertical heads for an amazingly and a consistent result. So, I have two small questions I have. One is that, especially with regard to your MSME and retail portfolio, because in the last around more than a year, we have increased our footprints across India in a very calibrated way. So, what sort of boost in the MSME and retail credit we are expecting because of the increase in our footprints across India, means majority in the hinterlands also. And the second is that since we have increased our footprints with additional zonal offices, additional branches, obviously it will boost the business. So, and how do we see because of this the impact on the cost to income ratio? Thank you so much, sir.
This MSME and retail as of now for the past 2 years we are growing at the level of 24 to 25%, and MSME we are expecting around 20 to 22% growth rate in coming quarter also, and retail around 23 to 24% is the growth rate we are expecting. And second point is regarding
cost to income ratio.
Branches, yes. Branches we have, current year we have opened 106 branches and another 150 branches permissions is already given and in the process. So before March, this quarter, another 50 to 60 branches we will open to end with 2,200 branches by March. And the remaining branches will be opening next year.
Okay, sir. And on the cost to income ratio, sir, how do we see?
Cost to income ratio is now, I think, 39-40. And our aim is to keep around the 40% cost to income ratio. That we will be able to do that.
40% plus minus 1%.
Yes.
And sir, one small question, very strategic question. Like if you see in the MSME and retail, majority of the transactions that are happening on the ground is not because of the credit formation right now. It is because of the balance transfer that is happening. That means the customers are moving from one bank to the another every 6 months. So how do we put ourselves, what is our strategy so that we can grab the majority of the pie that is shifting from one bank to the another, especially in the MSME, it has been the trend of lately for the last around a year and a half, that even for 50 paisa, 25 bits, the customers are moving from one bank to the another. So what is our strategy to maintain the MSME book, consistent MSME book? These are just strategic questions I have.
Yeah, Ashfaqji, as you have asked, no, I'm Ashish Pandey here. So as you asked,
very good evening, sir.
Yeah, good afternoon. So as you have asked about MSME growth and retail, so you had one more thing in mind, like, when we are increasing the branches, so how, the growth. So MSME has already explained, and this has very clearly told you that how we are going to do the growth from the MSME retail and even the agriculture outside Maharashtra with this new footprints. Now you wanted the cost to income ratio. Certainly you feel probably that with the increase in branches there will be more than the expenses. But let me tell you very clearly that our bank is expanding with the very clearly the hub and spoke.
Your voice is not audible, sir. Please, sir.
Yeah, so I think hub and spoke model. So where we have only one branch mainly, and then we are having either BC and the CSP model to serve the customer. So that is a very cost-effective one. Secondly, the bank has also looked entire processes. We are reviewing it. So wherever with technology we can reduce the cost. So that is also taking place across the various, the functions in the bank. So that is why cost to income 40% plus minus 1%. Now your third question was the MSME and retail. So what you are probably perceiving is that there is a huge balance transfer. Balance transfer. Am I audible?
Yeah, sir.
Okay, like balance transfer is going on, but actually we are perceiving differently. If you see even the various credit rating agencies and various research reports, see the demand is very welcome. If you take the housing itself and both vehicle loan, particularly the EV segment, the demand which is coming in is very quite huge. So what we are doing that the Bank of Maharashtra has also fine-tuned its various policies where the DSA appointment in the specific areas, specific locations, and also bank has identified along 15 clusters. So I would not say the cluster scheme basically, that is also in place, but then specifically focus with mid-corporate branches and the corporate finance branches where we are targeting location-wise, and we are trying at each location, like maybe I should say, like the tiles, maybe a cluster, maybe a textile can be a cluster. There are 3 to 4 clusters. If you take textile, which is Bhilwara, Tirupur, then engineering, Coimbatore is there, Ichalkaranji again in the textile. So if you take, the bank is very clearly like 300 to 400 crore eyeing for these clusters specifically at each locations. So not only the balance transfer is yes, the bank is having very much competitive edge because of the interest rate. So if you see the rate of interest in the home loan is also one of the lowest. So 2-3 projects are very competitive. So we do have a competitive advantage and the balance also there, but then demand is also very much picking up, which bank is catering with specific tie-ups, with a specific approach, focus approach and the locational approach.
Yeah, I would like to add, I'm Vijay Kumar here regarding MSME. You asked specific question that only the files are shifting. Yes, I do agree, but we are also in the market that we also have a scheme called Zarpapati. So we continue to focus on the customers who left a few years before. 4-5 years before, we are bringing them by giving very common market-related demand, attractive rate of interest and returns. Our strength is now TAT, improvement in TAT, which we are focusing. And focused approach, we have identified major centers where we are giving a thrust for improving in that particular cluster. Through that, also we are improving MSME. If you look at the MSME, there are 3 aspects, only micro, small and medium. We have gone a very huge shift, huge increase in the portfolio of micro. All our banks, all our branch, brick and mortars are doing micro now. Which align with the national priorities, be a Mudra or a PM Stand Up India or even PM Swanali. We have been focusing, so we are in align with the national priorities objective. That is the reason why the MSME growth is robust, and we continue to focus on this.
Agreed, sir. Perhaps my compliment to your TAT is perhaps the best in the industry, I would say right now.
Thank you.
And many congratulations, sir, for answering all the questions. Sir. Thank you so much.
Thank you. We have the next question from the line of Akash Jain from Ajcon Global Services Limited. Please go ahead.
Congratulations, sir, on a very good set of numbers. My questions are regarding the co-lending book. What is the size of the current co-lending book, and what is the target to increase it?
Co-lending. Sir, at present, total loan book size in co-lending is around 500 crore. We have developed our software. So once that is stabilized, we will take it forward, sir, on much larger scale.
Okay. And are we in talks with NBFCs to increase this book?
Yes, sir. We regularly have discussion with all the stakeholders in this regard, sir.
Okay. And also on the gold loan book, what is the size of the gold loan book, and what is the bank strategy to increase it? Now the gold loan balance outstanding is around 6,000 crores, and gold loan is growing at the level of around 30 to 40%. Okay. And what is the target for this book? So target is given to the branches to reach by 8,000 crores March. I think we may be able to reach to 7,500 by March.
Sorry to interrupt, sir. We missed on the number. Can you please repeat it?
Yes, target to the branches is given around 7,500 crores by the March end. So we may be able to do that. Gold loan book. And what is the yield that you are getting on this book? Yield is around the 7.90 to 8%. Okay. And also in last quarter, we had talked about using the excess SLR. So I think it was around 18,000 crores as on last quarter. Yes. So what is the excess SLR as of now, and what has been utilized so far? As of now, only 3 to 4% is excess SLR is there. Balance we have already utilized. That is why we have not raised much funds through deposits, and thereby deposits stabilized. So another 5,000 to 6,000 crore excess SLR we may be able to utilize through increasing the CD ratio. Okay, and CD ratio we have talked about, I think, increasing to 80%. Yes. So that number we are sticking to. Yes. Now it is 75%. Another 3 to 4% we may be able to increase that. Okay. Yes. Okay. Okay. Thank you, sir. Thank you.
Thank you. We have the next follow-up question from the line of Ashok Ajmera from Ajcon Global Services Limited. Please go ahead.
Thank you for giving this opportunity again. Of course, a lot of clarity has come, after the deliberations with my other colleagues. But, sir, I would touch again this raising the capital of 1,000 crore through equity. Sir, now, of course, our share prices are firming up, and it has come to a very good level, almost about, I think, 1.75 to book, or maybe it may reach to maybe 2 times of the book. But when our capital adequacy is already 17.5%, and we are having a very good profitability, and in any case, it doesn't help as far as your CD ratio is concerned. What is the basic purpose of raising this 1,000 crore as equity now, just to take advantage of the rising share prices, or anything else is there?
You know that as per the SEBI guidelines, we have to reduce the government shareholding to 75%. So partly for this purpose, we are coming with the equity issue of equity share capital. And you know that we are having the growth of advances 20 to 25% we are planning. For that next year we require the capital. So for that we are going to raise the equity share capital.
So from 90.97%,
that it will not remain 90.77 once you increase your advances by 20 to 21%. So for that, at the time you require the capital.
Okay, the government holding.
Government will come down by 4 to 5%.
Only by 3 or 4%, I think.
Yes.
Just come down with that.
Yes, sir.
Sir, my one question which was there last time also, which was remained unanswered, was that note number 12, the accounts acquired 1,916 crore at 24.91 tangible security. I just wanted to know the quality of these accounts which are required with such a low percentage of the tangible security. what are these accounts, and after having acquired, is there any stress or anything has been seen in last couple of months on these accounts?
I will tell you. Good evening, Mr. Ajmera. I am Sanjay Rudra. These accounts are basically about related to the securitized asset which we have purchased from other NBFCs. These are basically pertaining to MFI. MFI loans are not considered as a secured asset in our book. So we have classified this asset under the unsecured category. Mostly these are pertaining to that only. And here, when we are going for the full buyout, we go for the loss estimation also. And as per our book, it is loss estimation given by most of the MFI is below 3%, but it is basically in the range of 1 to 1.5%, which we are observing as on date for the last so many quarters. So the NPA percentage in this book is very low, and the returns are very good.
So going forward, are we continuing the same trend? Like it becomes to almost about, I think, this is 1,916 is a good amount during the quarter. So are we going to keep the same trend, or we have reached to certain level now and we don't want to increase much?
I will explain here that, see, these are the MFI loans, which are the maximum duration of the loan is between 1 year to 15 months only. Because they are giving for 24 months, then there is a holding period is there. So effectively it is coming in our book for a period of 12 months to 15 months. So we are acquiring this pool, but the repayments are equally fast. Most of the loans are repaid within a period of 18 months. So these are the acquisitions, but outstandings are always much lower than what is acquired during the year, quarter.
Thank you, sir. This now, since we have already, as a discussion was going on, that we are already on the net NPA of 0.47%, and whether net to net the recovery from the account which are totally written off will come either as a reversal of provision or as a profit to the book. So naturally, I mean, do we need to have any further provision? So what do we have in mind about that ad hoc provision of 1,200 crore which we have on the COVID account, developing the COVID situations in future? So do we have any plan to even make use some part of that even March for the whole year ending so that no further provisioning as such net is required in the March and we can have a bumper profit in the books? Any idea on that?
As of now, nothing is given by the board. Board is last quarter also at the board level they have discussed, and the Reserve Bank of India level also. Then only the third wave started somewhere here and there. Then they told that we will wait and see. Yes. And but of course, finally it has to come to the books as a profit, and it will come to capital or profitability. It has to happen that.
Sir, now this just couple of on credit side, what is our position on direct lending for onward lending to the priority sector to NBFCs? Have we reached to that particular level? Are we considering them still? Second is our corporate book has again started growing well. Excuse me. Hello.
No, actually,
the voice is echoing.
Can you hear me?
The voice is echoing.
Yes, we can hear. Please carry on.
Some color was given that I think the GM credit, that infrastructure and something. Can we be a little more specific?
No, NBFC, we have board approved level is given up to 8 to 9% of the total advances we can go NBFCs, but we have gone only 5 to 6%. There is gap is there 3 to 4% of the total advances, but very cautiously we have gone for that. And now presently we have gone for some of the accounts, basically corporate is for some of the pharma sector or some petroleum sector and some aviation. Aviation means not this type of aviation sector per se. It is for development of airports. So highly rated AA and above accounts, we have gone for that. And some amount is gone to NBFC also, 2,000 to 3,000 crores, but keeping 5 to 6% of the total advances, we have kept it for NBFCs.
Yeah, Ashok, particularly manufacturing, we are looking more as a bank in focus, where exports are.
I would request you to come closer to the speakerphone and speak, please.
Yeah, actually we are looking, more of a manufacturing sector in pharma or maybe a textile or maybe even the engineering goods. And what we are looking is that should be an export more. So the bank is focusing to augment its even fee-based income. So that's the reason that bank is focusing more on the ventures, particularly with the pharma, textile, maybe in some of the things which we have seen, the glass is doing very well, industry and some of the places. And particularly in some of the location we have seen even the EPC is also doing somewhere better, slightly. So these are some of the sectors which we are looking apart from the infra. And as such, the forex part where import, export are more, and where the good working capital and the manufacturing sector is the focus.
What are your views on auto ancillary?
Yeah, auto ancillary too, particularly EV side.
Okay, we are open for that.
And I think that our export growth rate is quarter to quarter, it is around 40 to 45% for the current year. That export is doing well, and earlier banks had not having that much export area, and medical devices, medical equipment, that type of area.
Even hospital sector we are. Yes.
So it is a wide range of areas, not a specific area.
Yes.
A very wide range. My last question, sir, is on treasury again. That now where do we stand? So you have already given the idea that as per the RBI, what we can infer is there can be another 25 to maximum, I think 25, because 35 basis already came, 60 was expected total. So if that is the peak comes, say another 25 basis point, does it make any change in our dynamics, in our way of working, or everything is fine? We are capable of taking care of that?
Yes. Everything. That is what first itself I told that 210 basis point change has come. It will not change any dynamics. So another 25 or 50 basis point comes also, it is not going to much impact.
Okay. Thank you very much, sir, and all the best to you all.
Thank you.
Yeah, very, very happy with your working and the results. Thank you.
Thank you.
Thank you. We have the next question from the line of Franklin Moraz from Equitas Wealth Advisory. Please go ahead.
Yeah. So I joined a bit late in the queue, so sorry if this question has already been answered. I wanted to know what is your total write-off book?
Total write-off books around 18,000 crores.
So this is which is already part of your book, but it has not yet gone out of the books, right?
No, it is already written off in the books, and it is not in the books actually. But recoverability is concerned, legally it is recoverable, and we are recovering also. This quarter we have recovered around 200 crore, and next quarter, as our GM recovery is already told that expectation is around 500 crore recovery for next quarter.
I make it more clear. I'll make it very simple. See, 18,000 crores, it is written off from the financial results we have published today. But this 18,000 crores very much in the branches of our bank. And our branch at the field level, they are day in, day out, they are focusing on recovery. And the target for recovery is also on the basis of the outstanding line in the branch book. But publication of results, it is not there.
Okay. Also, what part of this book would probably go under NARCL, maybe in the next 1 year or 2 years?
It is around 3,000 crore, 2,700 crore to be precise.
This is already transferred?
No. The process will start now. First we'll transfer in this month. It is expected to be now. The process has started.
Okay. And what could be the maybe timeline for transferring of this 3,000 crores?
No, it is a shortlisted accounts. Now certain accounts will get finalized in a process, and in a process it will happen. So it keeps dynamic list always. It keeps changing also with the circumstances. So at present, at least we expect the one account in the first quarter definitely will get transferred, and then in days to come.
Okay. And could you also share some insights in terms of, what is happening at the NARCL level? Because the last year is when, they started, but so far we have not seen any, accounts getting resolved.
Yes. The NARCL, actually there was a delay because of that approval of bank guarantee, which SRs are given, which is backed by the government guarantee. That approval NARCL was to be received. Now, very recently in the last week only, the government has given the approval, so that process has now started. Now everything will happen fast. The account transfer will start happening now.
Any quantum that is being targeted, or maybe in the next 6 to 9 months?
See, for our bank concern, we expect at least in the first quarter, one account is definitely, this Q4, one account is definitely going to be transferred. Remaining account will follow in the next year.
Okay. And all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Shri A.S. Rajiv, Managing Director and Chief Executive Officer, for closing remarks. Over to you, sir.
So thank you so much for having 1 hour discussion of this, and afterwards also any update, anybody having any kind of queries or anything, we will be in touch with you, and our CFO will be open to give any clarification or any figures, whatever required. Thank you.
Thank you.
Thank you. On behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect.